Hi, this is Keith Summers with Lice Mercantile, here to give you a crop insurance update for the 2021 crop year. As many of you know, the crop insurance deadline is March 15th, when you need to be making changes to your policy or take out a new policy. Commodity prices and insurance guarantees will be higher in 2021. Crop insurance prices are established during the month of February, and as of Tuesday, February 9th, corn is at $4.51 and beans are at $11.60. Market volatility is also higher this year, and a combination of the two has insurance rates up 40 to 50%. Make sure your coverage is where you want it. There's a lot more to protect this year. Many of you choose a supplemental coverage option last year. SCO is a county level policy that follows the coverage of your underlying policy. If you have revenue protection, then SCO covers a county revenue loss. If you have yield protection, then SCO covers a county yield loss. SCO pays when the county yield or revenue falls below 86% of this expected level. The Pickaway County soybean expected yield is 56.9, so losses would trigger at a yield below 48.9. The Pickaway County corn expected yield is 181.6, so losses would trigger at a yield below 156. SCO pays out in full when the county yield or revenue falls to the level of your individual policy. So if you have an 80% policy, SCO would give you a band of coverage from 86% down to 80%. Your underlying policy pays at the individual farm level. SCO losses are paid on the county level. SCO premium is subsidized. Remember, you cannot have an SCO policy and elect ARC with FSA. Indemnities are paid out after the county yields are announced in late spring of the following crop year. It's possible to have an individual loss on your underlying policy and not have a loss on the SCO policy, and vice versa. This year, the federal crop insurance has offered a new policy called the enhanced coverage option. It works like SCO, except you have a choice of the 90 and 95% trigger levels. The full amount is paid when the county yield or revenue falls to 86%. ECO premium is subsidized, and you can elect ARC at FSA and have ECO as a major difference. In Pickaway County, at the 95% level with revenue protection, corn losses will trigger at a yield below 172.5 and would have triggered in 11 of the last 20 years. Soybean losses will trigger at a yield below 54 and would have triggered in 8 of the last 20 years. ECO is expensive, but it covers shallow losses and will trigger more often than SCO. Remember, ECO is a county level policy. Indemnities are paid out in the spring following the crop year, and it's possible to have an individual farm loss and not have an ECO loss. We still offer many private products at levels above 85% that cover your individual farm. Products like RAMP, ICE, and a revenue protection policy. Each of these have capacity limits, so notify us ASAP if you're interested in those. Remember to notify us of any changes to your farming entity. If you formed an LLC, married or divorced, or have a new partner or new shareholders in your entity, we need to know about that. We look forward to discussing coverage with you over the phone, in person at our office, or at your farm. We'll do what's best for you, and thank you for your business.